Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. And what a week we have this week, or not, because arguably it was one of the most lackluster Fed announcements we've ever seen, despite the fact that after a number of years of raising interest rates and stock market being at all-time highs, gold prices rising, everything doing fine, unemployment down, non-farm payroll up 39% June to July, for some reason we needed to raise rates. So what do you think, Eric? You think those prices were already reflected given on how the markets moved today?
Miles, I just have to laugh. As you guys know, we record on Wednesdays, so the Fed announcement just took place a few hours ago. Some stuff may change by the time this comes out tomorrow, but I had to laugh because Trump has been so adamant that the Fed cut rates because he wants a weaker dollar. He's got to have the weaker dollar. So we finally get rate cuts today, and everything falls. The Dow's down, NASDAQ's down, S&P's down, gold's down, silver's down. But what's up? But the dollar. The dollar's rallying today.
Yeah, Eric, with everything down but the dollar, I think the argument can be made that we're talking about the efficient market hypothesis here, right? I mean, weeks and weeks of expectation of rate cuts, or at least a couple weeks of expectation of rate cuts. So prices were already in. I mean, you look at the charts, any chart this week followed patterns that it's been setting up for a while. Everything stayed within its trading ranges. Nothing moved. Nobody would know there was a rate cut today just by looking at the charts.
Right. Well, Miles, and I think it's important, over the last few weeks, we've got a pretty good amount of information from 3 different companies that this might just be the direction we're moving. We had the report from the IMF that we both discussed on this show and the commentary. We had the information from KeyBank that was sent from a client of ours talking about what you can and cannot keep in your safe deposit box now, which includes gold bullion. And now we see UBS, which is the largest bank in Switzerland. They have started a new policy where any of their wealthy clients, as they call them, 2 million or more, are going to get hit with a negative 75 basis point interest rate.
Right. So you get to pay them for the privilege of letting them use your money while they have it.
That's right. If you guys want a copy of any of these 3 reports, feel free to give us a shout. Just all we need is an email. We can shoot those over to you. A lot of good information in these reports, though.
So we will go ahead and dive into the charts here, albeit it's going to sound pretty similar to last week. I will want to circle back to a couple things you said during our opening discussion, because I did have some time this afternoon before recording to catch the Q&A session of Powell's announcement, which actually was worth listening to, because he gets a little feisty there during a Trump question. So I want to bring that up. But first and foremost, let us dive right into the gold chart. So starting off with gold, for the last couple weeks, we have been bouncing above the lower end of our trading channel. Today's announcement, while it dropped some, did not actually get us below that. We had a candle wick push below, but it's right back above and probably will close up there. We're still waiting for that nice corrective move back down. I think back into the mid to high 1300s, but I think we go higher before we go lower.
And silver, Miles, along with everything else today, has kind of fallen off, down 31 cents, a little under 2%. It's had some good strength up until today. Where do you see silver hanging?
Well, silver, we had that little bit of a bounce back up in the ratio too. So even though gold came down, silver actually did come down a little more, but they're on opposite ends of their trading channels. Gold's at the bottom, silver's at the top. So we've had these resistance levels. The first one we took out earlier this year, just above 16. Second one, trading channel, up near 17. Last one, around 17 and a quarter. And that takes us back to those last highs in 2018. Prior to the big fall off the edge of the table that took place. So now we're starting to talk about some previous pricing. Again, and we went pretty deep into this a show or two ago, just talking about how silver really is lagging behind gold. And obviously that's stretched that ratio up through the 70s, the 80s, into the 90s. The ratio between gold and silver is back down in the mid 80s, and silver needs to get above 20. Just to even begin to compete with the move that gold has had recently. So that's why we continue to promote silver as the lagging opportunity. And when that rubber band snaps back, you want to make sure you're on the right side of that.
And the other thing that we've continued to promote here is platinum, due to platinum's extreme lows relative to gold and palladium. Where is platinum at for you today, Miles?
Platinum, similar to silver, but did nothing on the rate announcement today. It's at the top end of its trading range. My short-term projection was a little bit of a pullback down and then pushing up to low 900s, 920, the previous high back in April, and then eventually pushing above that to set a higher high. So platinum, no change whatsoever this week due to rate announcements or any other news. And finally, palladium still sitting above the previous high. Palladium's bumping above the top channel. And at this point could go either way. $150 correction down is still bullish, and a push above is bullish. So palladium still remains, the what's the opposite of a sleeping giant? A roaring giant? I don't know. We'll make something up there. But palladium, continues to be outperforming everything else in the metals. Eventually, that comes to a halt, or at the very least, like silver has started to do with gold, pushing that ratio down by 10 points. Palladium and platinum ratio will also begin to tighten.
Last but not least, as we mentioned, the one thing that was kind of rallying today was the dollar. Dollar's up above 98 again. Miles, are you bullish or bearish on the U.S. dollar from this point?
Well, I've been saying for a year and a half the dollar's going to 100. I know Robert and I had that disagreement earlier this year, expecting the dollar to turn south. And I think there was good argument for it, but I still think the dollar's going to 100. I think it's building a multi-year head and shoulders pattern. And then we see a turn in the dollar from there. And rounding out Fed Day, we should look at the Dow, just because the Dow did move. We had about a $560 swing up and down, so as much as 2% worth of movement today on Wednesday. But again, also nearing the top of its channel, bouncing back up after dropping. I think we're probably going to close the day out down about 1%. So ultimately, nothing really worth jumping up and down about on the Fed announcement. What everyone expected to happen did happen. There was no reason for it to happen, as far as I'm concerned, except for one very important thing. And I mentioned this last week. I wanted to see what people would say in the comments, and I think most of our listeners hit the exact same thing I'm looking at, and that's the fact that we have this long-term systemic risk in certainly government, but definitely the corporate bond market. And when you have a bunch of debt that needs to get rolled over, I think I heard as much as just over $6 trillion debt that will need to be rolled over in 2020. Being able to do that at lower interest rates does help save some companies' operating expenses. So anybody that jumped on the discussion about corporate debt and even government debt rollover, I think you were dead on in the comments last week. I completely agree. And then I brought up one other thing in our show last week, the idea of international pressure. And I mentioned a second ago it was worth listening to the Q&A, and Powell actually got asked that question. It was the last question he asked, where do you see the systemic risk? Why the rate drop? Why is it necessary? And he just quietly said, well, it's external, international.
Well, you could certainly blame some of that on the trade war if that's what he's referring to. But as we've been talking about amongst each other for the last week or 3 weeks or so, is the shift in policy globally that negative interest rates are okay, and they're a tool that these central banks can use to rein in a recession. And as I mentioned earlier, just give us a call, give us your email. We'll send you these 3 articles because it's very important. We're not a fear-mongering network, but these things have caught our attention because it's stuff that we haven't seen in a very long time.
Sure. Well, the article's out about the UBS negative rate payment to their biggest and best clients. There was a quote in here with an expectation, an ECB expectation of, quote, lower for longer as far as interest rates go. Getting back to the Q&A, Powell was asked that question. Is this a directional change? And he vehemently denied that. He was refusing to stand up and say, yeah, we're looking at longer term lower rates. Doesn't mean it's not a policy option, but they're saying, no, we haven't elected at this point to go that direction. But it sounds like Europe already has. Right. So finally, the last thing I loved is that you hinted at here a second ago, the idea of this competitive devaluation and trade war taking place. He was also asked, after months and months of Trump begging for lower interest rates, Powell was asked, did this have anything to do with Trump? It was nice to see Powell, who's a pretty even-keeled guy, get a little defensive in the most Powell-esque way you can imagine, which wasn't a raised voice. He may have leaned forward on the balls of his feet a little bit, but he did vehemently deny that, saying, we have our dual mandate, unemployment and price stability, inflation rate targets at around 2%, which to me, inflation at 2%, price stability, I don't know how those things mesh when you have guaranteed price increases with inflation, regardless of how low they state it is. But he did vehemently deny the Trump suggestion, saying that we're not in the business of politics. So,
we'll see on that, because I don't think that this 25 bip cut is going to be enough to get Trump off their back, especially if the dollar keeps going up. I think that you're going to continue to see the political demand from the White House for more cuts.
Yeah, I'm sure Trump is sending them ECB reports saying, well, Europe's doing it.
So we want to ask you guys another question this week for the comment section down there. What do you feel the trajectory is for the U.S.? Are we going to zero or even negative interest rates, or will we continue in the same range that we've been in?
Well, that's going to do it for Golden Rule Radio this week. We thank you for stopping by. If you liked what you heard, do all the YouTube stuff by pushing buttons and ringing bells. Definitely answer Eric's question in the comments. If you have some thoughts, love to hear them. You can also head over to our website, McIlvaney.com. Twitter is @ICAGold. Facebook, McIlvaney Financial, or give us a call anytime if you want to discuss your personal precious metals portfolio with one of us or the advisors at McIlvaney ICA. Our phone number is 1-800-525-9556.
Thanks for listening.
Have a great week.